All right, guys, welcome back. This is example 4 out of 4. This is pound yen. So we're currently in the monthly time frame. Price is currently in a monthly order block. We have two down conservative candles right there. But even better yet, on the weekly is a strong low. Lining up with a breaker. Lining up with a breaker right there. So we're currently at. Also, because it's a strong low, it creates a weak high. So that's our overall target. On the daily, we were able to spot the high. So now we have a range. There it is, coming down into that point of interest that we currently have marked up right there. Now coming down to the daily, the 4-hour, all right? Coming down to the 4-hour, we see that this strong high was the one that broke structure, right? So now from here to here, we're gonna have a new range. So now we have to identify, right? Now I have to identify where is the low. Can we see a clear low being made? In here, we have, show you. So here we have a push up, and then we have three-cone formation that took out this three-cone formation right there. So that's the high that took out that low. You see that? Right there. And then what happened here? Price went back up. This high right here was supposed to take out this low, but it failed. That becomes weak. So this low right here pushed and took out what? Not that one, but this one right there. See that? Right? So that's our, move there real quick. That is our range from here to here. So let's clear this out. Remember, it must have a purpose. All right, so let's get down into the details. Let me mark this up for you real quick. Fix it up. So this is the one I took out. Structure right there. All right, nice. So before we broke this bigger structure point, this bigger range, this created a strong low. This took out liquidity, and then it broke structure right there. So from here to here, because this is a point that came down, then this point went up, took out liquidity, and then this point broke structure. So from here to here is your new found range. There's a range within a range. There is a premium discount. Asia is about to end. All right. We just created some inducement, and the closest POI is this order block right here. That's very obvious. It's literally right in front of us. Go to the 1 hour. It's an unmitigated wick. 4 hours, nothing. Check the 5 minute. That becomes a breaker. It's a breaker right there. All right, so that's our point of interest. Let's see. Now look, remember how I told you, we have to see how price is being delivered. If there's no internal liquidity, we have to see how price is being delivered. Create inducement, then it gave it a reason to go into this point of interest. Are you seeing that? Right? So now, this is a new range, right? Remember, just a range inside a range. So, playing this out, London is about to open right here. This was London kill zone. Nothing gave us anything here besides this long right here. London is about to open. London opens here. From here to here is a new range. This is internal range liquidity. All right. Now, go to the higher time frame to see if you can find APY. The liquidity, nothing there. Nothing there. The closest thing we could have found was this imbalance fill price action. right? But unfortunately, it didn't fill it. It went and it missed it. Then price drops from there. Now, our overall target is this high right here, this external liquidity from this range, from A to B. Why? Because we understand where we're coming from. Guys, don't forget the bigger picture, right? If we took this short, that'd be a counter move because we're currently looking for longs overall. We just broke this range. Is the first high that got broken ever since we started dropping. See that? We broke and now we're looking for longs. So if I take this short, I know and I'm prepared to take a long. And I know that I'm gonna exit. So here's the newfound range going down to the 5-minute. From here to here is the new range. That's the new range. All right. So price is coming down. The price being delivered. Look at that. It just created a 3-candle formation. So let's see if we can get a push below that. There it is. Price came back down again. 3-candle formation fails. Comes back down again. Because there was no internal range liquidity in here. But now, you will notice, now I can go to the 1-minute, but the range is from here to here, and it came all the way down, and it took out this 3-candle formation right here inside this range. This internal liquidity is still inside of this range. Now we're dealing with the 5-minute, with the 1-minute. I went to the higher time from the 15-minute, and because we didn't have no clear liquidity here or inducement, I wouldn't have taken it. Because liquidity is fractal, inducement is fractal, everything is fractal, right? Now this wasn't a perfect example. It wasn't no clear example. This is something that I probably wouldn't take personally. I would have, if I would have taken a trade, it would have been from here and just got stopped out because this came all the way down and took out the complete internal liquidity from this. And this happens. This is just out of our control. So now we understand that. That failed to get that low after it broke structure. That becomes our obvious target. So now we wait. After we broke structure, a new range can be created. Play this out. Look at this, right? Price came down. Price came down. Oh, broke structure. Price went up. Price went down. Price failed. Came down one more time. Failed. Why? There's a POI right here. So it's building liquidity above it to give it a reason to go into that. Taps right in. And then we take out both ranges highs. This one and then our bigger range that we were currently in. Now, let's go to the higher time frame to see this POI. Not down to 1 hour. Not down to 30. There's a 15-minute unmitigated wick. Mostly, I'll say a rejection block because there's rejection from both sides. So rejection block, I'll consider that rejection block. You will see on the 15-minute, we have a 3 clear candle formation. Inducement was made, no internal, just inducement. More than enough, take it along here. This is why we stick to a higher time frame, and we prefer to stick to a higher time frame for it to give us a clear inducement, clear liquidity that is present, that we know that we'll be able to take out. Delete all this. That would have been our long, and this would have been our target. And notice it created triangle liquidity. Now let's go back to the higher time frame. We're currently inside this range. Don't forget that. So we're currently in discount. We're not coming premium, and all of this internal liquidity. Point of interest, I think that was on the 1 hour, yeah, it was. Imbalance field price action. So my overall bias would be to take our internal and tap into this. Now this is an obstacle. It's an obstacle because my overall range is this. Came down to discount, anticipating this to get taken. So I'm going to expect a reaction from here, pullback for potential entry to continue going up higher. That's what I would expect. So let's see. Let's pay this out. Taps into that. Came in around 8 o'clock. Expecting a pullback. Shoot daily time frame. We have a rejection block. Yep. So from here, I already see it. From here, we have a rejection block. Now notice this. Notice this. Look what's just above it. Look what's just above it. This wick. See that? That is liquidity. And because we can see on the daily, clear as day, just above that, the POI. You see, and you can't see it here. You cannot see it here, but you can see it in the daily. Last previous day, right there. Why didn't this come in here? Any other reason? It took at the previous day low, tap into a point of interest, and now, because we have all these highs here, these are definitely trend liquidity. That should get taken. So this is what happens. Okay. Price now makes a pullback, lower time frame. We build up more trend liquidity. We should just smash this. And yes, we do. And then, ladies and gentlemen, we fulfilled our overall target from the monthly to the weekly. See that? Phenomenal. Fractal nature of the market. This. Let's see how we could have caught along here. So, let's go to the 15-minute. Gotta get Asia out the way first. So Asia session. $17. Zero. There's all Asia. All right. So Asia's liquidity. So what's just below it? Let's see. So we have a order block, a rejection block on the 4-hour. We have an indicator which is below Asia. All right, so what happens? Yep, did exactly what we expected. Yep. All right, so now London kills and opens. The London opens, took out this low. We just broke structure. And then we're gonna get now pullback. There's a pullback. And we just hit the overall target. And that pull was from this to this. Internal liquidity. Higher time frame POI. You can see it right here. Clear as day. Just like that. And then we could have broke this down. Could have gone to a lower time frame and do the same thing. Here, here. There's the inducement. No internal inducement. and it came into a 15-minute. Check the 1 hour. Hold on. Yeah, 1 hour. I'm going to get a wick. 15, 30, line up. 5. Yep, that would have been along right there. This came in around 10:35. New York. Overall first target. And then the rest. And then eventually, if you're going to swing, you know your overall target. So that's that, guys. This is going to be the last example. So it's going to be, like I mentioned in the beginning of the intermediate, it's going to be a lot of trade recaps. Every single week, I'm going to be doing trade recaps with trades that I took, whether it was break even, whether it was a loss, right? So those trade recap videos will just stack on top of each other, and eventually it'll be a huge library of a lot of chart breakdowns, right? And like I mentioned in the beginning also of, the intro of the intermediate course is, even if you see all of these chart breakdowns, right, it is completely different when you go to the charts and you do it yourself live. So it's why it's important to understand the logic, because you notice that every single chart breakdown that I did, these 4 chart breakdowns, it wasn't the same POI. It was like, and by saying POI, I'm saying that it wasn't just order block, it wasn't just breaker, it wasn't just rejection block, it wasn't just an executed wick, right? It wasn't perfect. The ranges weren't perfect. Nothing was perfect. It was all logic. It was just thinking and trying to grasp and understand what is going on. Different time frames that I use back and forward. That's a fractal nature of the market. But you're starting to see how we use the higher time frame to understand our overall direction of bias. Now, again, this is intermediate. That's why we're sticking with the higher time frame. And the advanced, we're going to dive deeper into the smaller time frames and stacking trades and hedging, and just giving you pretty much a way better understanding, which in other words is surely to mastery. And by mastery, I mean once you put in the months in of work, you'll get to the point where you'll be able to catch trades day in and day out. Sure, not every day, but to the point where you'll be able to just see it naturally. Pretty much just the way I do. But that'll be it for this, guys. If you have any questions, let me know. As you can see right here, real quick, that long that we took, it went for an overall 1 to 30, targeted the internal liquidity of this bigger range, made the pullback, and then eventually I targeted the monthly week high. Market is fractal. A lot of us are going to see it differently, and that's okay. You have to trade what you understand and what you see. And that's just the secret to it. There is, nothing else to the strategy. The basics is the foundation, is what builds the strategy. These chart examples shows you how to apply it together in the live markets, how I apply them, how I view the market. And this is how I view it. This is how I apply them. It's much easier, on the whiteboard than it is on the live markets. Right? That's why I said it's easier to teach on whiteboard than it's on live markets. Because on live markets, it's much more complicated. But what matters is that you understand the logic behind it, you follow the set of rules, right? Once we get into the advanced portion of the course, everything eventually should make sense. You should have a full grasp understanding of counter trends, hedging, stacking trades, etc., trading within the session and whatnot, all of that. These are just basic examples of higher time frame with higher time frame targets and higher time frame duration of bias to show you how important it is to always apply the higher time frame. Okay. And then eventually you get down to lower time frames, etc. But the market's fractal, we use it the same way. No difference. Right? So take everything you learn from the basics, rewatch it if you have to. Take everything you learn from these 4 chart breakdowns and obviously what you're going to learn from the trade recaps and go and apply it to the charts. The only way this is going to make sense to you, the only way you're going to be able to see this is by applying it yourself to the charts, testing it out, back testing. And I really mean back tests. A lot of hours must be put in. Right. So this is it for now. On to the next one.